Hi guys, KP this side from InvestorWise. Hope all of you are doing good and staying safe. So we are going to do another video on the stock analysis, and for this week we have picked up L&T Tech Services. This is a company which was founded in 2009, and this company is based in Vadodara, that is in Gujarat. It is a subsidiary of L&T, the Larsen Group basically. And what happened is in 2013, L&T decided to operate in 9 different verticals. So what they have done is they have categorized their operations into 9 different verticals. Based on that, they came up with 6 different subsidiaries. तो आइडिया ये था कि इनको अपने ऑपरेशंस को डेलीगेशन एंड स्पेशलाइजेशन के फॉर्म में लेके आना है, सो दैट instead of wholesome, they are concentrating on certain activities under each subsidiary. And that is the time when L&T Tech Services has come up with one of the subsidiaries of the parent company L&T. इस कंपनी का मेन स्कोप क्या है? What are they mainly into? They are into a very specialized kind of a service which not many companies are doing. They are doing the research and development in the fields of engineering. So yes, the company still has its roots in the IT sector part, but then they are using that technology for engineering services. Okay, this company, they got their, so basically what we refer to such services is ER&D services, means E stands for engineering. Engineering related research and development is what these people are supposed to do. This company came up with their IPO in the year 2016, which means now it's almost like 4 years back, when this company was first listed on the exchange. It's listed on both BSE and NSE. And this company in 2017, they did a very remarkable, a very distinguished kind of an innovation, where what they did, they developed some personal safety gear for the engineers who are functioning in different projects. So basically they developed this personal safety gear. Obviously they're supposed to wear helmets, they're supposed to wear jackets, shoes, they have those gum shoes, right? Now what they did, they have installed sensors in these attires. They have installed sensors, and these sensors will judge how efficiently the engineers are working on the floor, on the project, when they are on the ground working. So it was a very unique kind of a technology. And then they used cloud technology, and they have the central database. So every day when the employee will put up this attire, they will go and perform. So based on that, a sensor will do analysis of their performance, and that will be submitted in the centralized database. This is the technology which they have done, and something similar they will be doing throughout their operations. Engineering related R&D they will do, unique service. It's not something like the orthodox technology related services what TCS Wipro are providing. TCS Wipro, Infosys, they also have R&D department, but here L&T Tech Services सिर्फ R&D पे focus कर रहा है related to engineering. Okay, I hope now you have understood what company is mainly into. Okay, why should you invest in stocks which are doing only the research and development part, and not go for the orthodox or typical consultancy services share like TCS, like Wipro, like Infosys? Why not invest in those shares, and why focus on these shares which are doing only specific job? I'll give you my reasons for that. If you see, in 2018 December, Economic Times has come up with an article that in 2018, the first 9 months of the year, the ER&D related companies, they have shown growth much higher than the traditional consultancy software services firm. And if you look at the first 9 months of 2018, ER&D has registered a growth rate of 20% in their revenues, whereas the traditional IT sector companies have registered a growth rate of only 8%, which means although they are operating only in a specific field, बट फिर भी यहाँ पे वेल्थ क्रिएशन का स्कोप बहुत ज़्यादा है. बिकॉज अगर कंपनी का रेवेन्यू काफ़ी एग्रेसिवली ग्रो कर रहा है, देन देयर इज़ एन अपॉर्चुनिटी फॉर दी शेयर होल्डर्स, बिकॉज इफ देयर इज़ मोर रेवेन्यू देयर विल बी मोर प्रॉफिट्स. वी अंडरस्टैंड दैट लॉजिक. And if there are more profits, there will be more earning per share, and that is exactly what we are looking for as an investor, as a shareholder. Okay, do they have any competition? Yes. If we talk about the pure competition means pure competition is like where some other companies also operating in the similar activities, the same operations they are also performing, then one good company which I found is Tata Elxsi. Now Tata Elxsi is also the stock listed on BSE and NSE. They are also performing services in the ER&D field itself. Other companies which also do ER&D apart from the typical consultancy services involve all these big names which you are already aware about, like the HCL Tech, the TCS, Wipro, Infosys. Cyient is another company which is also listed. Persistent is another company which is also listed on the Indian exchange. These are some of the competitors of LNTTS. Okay. Now, so I told you, for me, the first and the foremost thing is obviously the fundamentals of the stock, but then it does not mean every stock which is fundamentally good cannot be purchased at any point of time. मैंने ये बहुत बार समझाया है, मार्केट में सबसे इंपॉर्टेंट क्या है सर? मार्केट में सबसे इंपॉर्टेंट है ये समझना कि आपको सही स्टॉक में किस समय एंटर करना है. सही स्टॉक तो बहुत सारे हैं मार्केट में, पर किस स्टॉक में किस समय एंटर करना है और किस समय उसमें से निकलना है, these are two most important things, and that is where we are helping our clients to decide that. If you look at the price range for this share, I've taken last 52 weeks data. The stock has shown a low of 995, which obviously would have happened in the month of March when the first time pandemic of COVID-19 started spreading in India, and we witnessed a lot of pressure in the equity markets in the month of March, and it has registered a all-time high of the 52-week high of 1820. Right now the stock is trading at a price of 1068, guys, which means if I again compare from the 52-week high, stock is trading at a discount of 41%. But as I told you in my previous videos also, just because we get a discount of 40%, do we still want to buy it, or we still feel even at this price the stock is a crappy stock and we should not go for it? So the question is it still worth it? That's $1 million question. Should we go for this stock? Okay, so let's first talk about the fundamentals of this company. I have decoded the fundamentals, and again I have taken certain points to justify why I feel this is an attractive buy. If you look at the market capitalization of this stock, now market capitalization kya hai sir? Market capitalization is number of shares into current market price. If you look at the market capitalization of this stock has a very small market capitalization. और market capitalization के फॉर्मूला में क्योंकि हम नंबर ऑफ शेयर्स आउटस्टैंडिंग लेते हैं, तो ऑब्वियस सा बात है अगर किसी कंपनी का मार्केट कैपिटलाइजेशन छोटा है, that also means their number of shares outstanding in the market are also less. So LTTS has a market capitalization of just 11,000 odd crores, which is very small. But how do you know if that is small or not? So what I've done is I've taken some companies with a bigger market capitalization just to make you understand that how small is the market capitalization of LTTS. The market capitalization as well as the shares which they have issued in the market are very limited. Is that good or not? That I will discuss after some time. LTTS has a market capitalization of just 11,000 odd crores. Reliance has the highest market capitalization in India, which is 9,86,851 crores. You can understand how big is their market capitalization, and they have 6,339 crores worth of shares outstanding in the market. Infosys again has a market capitalization of 2,77,814 crores, with total number of shares outstanding being 2,129 crores. And ITC, one more company I've taken, which has a market capitalization of greater than 2 lakh crore, and it has 1225 crore shares. If you look at that figures, you find that LTTS has drastically small market capitalization and the shares outstanding. Is that a good news? Think of it like this. The basic principle is, when you find out the total profits, you divide it by the number of shares outstanding. Less the number of shares outstanding, more is the EPS, more is the dividend, more is the bonus which you will get as a shareholder. So your rewards are more. When less number of owners are there, rewards are more. When more number of owners are there, per share basis, everything will be distributed among larger chunk of investors. So going by that means LTTS small equity is actually good. Let's look into the next part. They have a reserves of 2,750 crores. That's the reserves they are sitting on. They have reserves of 2,750 crores. Again, I've done some new kind of a maths here. If I see reserves to capital ratio, how much reserves I have compared to the capital which is outstanding in my books, if I do that analysis, I find that reserves to capital ratio for LTTS is basically reserves divided by total capital. Reserves is 131 times the capital. Reserves is 131 times the capital in case of LTTS, Continuing with the same three companies, that is Reliance, Infosys and ITC, which are the best companies as far as fundamentals are concerned, but all of them have reserves to capital ratio much lesser than LTTS. So going by that means, if we see reserves compared to capital outstanding is very high for LTTS. Look at point number 3, guys. They have a promoter holding of 75%, which means if promoters are sustaining their holding in the company, it means promoters are having a lot of confidence in their company and they are not willing to dilute their ownership. For last 4 years, I saw they have been maintaining that 75% ownership in their own company. Promoters holding is 75%. Why not more than that? Because SEBI regulations require you to trim it down to 75%. इससे ज़्यादा promoter hold नहीं कर सकता है. 75% का लिमिट है अपसाइड पे, तो उन्होंने 75% होल्ड करके रखा है, which again gives me a positive signal कि अगर प्रमोटर ने अपनी कंपनी के शेयर्स पकड़ के रखे हैं and they are not diluting their ownership, it means they are very confident about their company's future prospects. It's a zero debt company, which again is good. Most of the IT sector companies are a zero debt company, so there is nothing special in case of LTTS. But yes, as a shareholder, मेरे लिए ये बहुत important है कि कंपनी में डेट अगर है तो क्या ज़्यादा डेट है और इज इट ओके मैनेजेबल डेट. बट इन दिस केस दे हैव नो डेट, plus the shareholding of the promoters is not pledged. Another very important point which we need to understand, अगर promoter अपना shares को pledge करके loan उठाता है, that is a little dangerous signal for the investors, क्योंकि कल if promoters are not able to pay back the loan or any debt as it is aging, then उनके pledged shares को बेच दिया जाता है, which then they just sell the shares at throwaway prices and other investors will also suffer. But in this case there are no shares which are pledged. I hope guys you are understanding, right? If you look at the profit and revenue figures, I have taken figures right from March 16 to March 20. Good news is इस company का result आ गया है. In fact, the results came out yesterday itself. And from 16 to 20, the company has registered a 85% growth in their revenue, which is very decent, guys. From in 4 years data, if we look 16 end to 20 and this 4 years data, they have registered a growth rate of 85% in their revenue, and net profits have also grown, and which also means their net profit margins have remained healthy throughout 4 years. They have registered a net profit growth of 95.37%, which again is a very, very healthy growth. We'll do relative analysis later on. 1920 we all know have been a year of ups and downs, so I wanted to bring focus only on 1920 as well, that whether company did well in 1920 or not. Overall 4 years में हो सकता है they would have done better in last 3 years and not so good in this year. That is also important, क्योंकि मेरे को तो शेयर आज खरीदना है ना. I want to buy the share today. So if you look at the 1920, the crisis year, still they have been able to generate 10% growth in their revenue, and yes, this is a little less, but still they have been able to sustain a 7% growth in their profits, which again is a very good sign. Next point in fundamental analysis is the beta value of the company. अच्छा, beta क्या है? ये एक नया term है. Beta is basically how sensitive the stock is, how volatile the stock is. जब market का return मतलब निफ्टी या सेंसेक्स में 1% का change होता है, तो stock में change कितना है? So we prefer stocks which are less than 1 or close to 1. Anything greater than 1 in this volatile market is not good. So this is a defensive stock. We refer to them as defensive stock. If stocks have beta of 1.2, 1.3, we call it as aggressive stock. But this stock has a decent beta of 0.69, which means when Sensex goes up by 1%, this stock will go up by 0.69%. At the same time, if Sensex drops by 1%, this stock will drop by 0.69%, which means this stock is not so volatile. And from investors' perspective, that is really good that it is not a volatile stock. And lastly, if you look at price to book value, I've told this multiple times, we don't want price to be at a very high premium compared to book value. So this is decent, guys. 4 times the price to book value is decent. They have a book value of 265 rupees. Stock is trading at around 1000 something. So this figure may not be completely updated, but yes, it is close to 4 times itself. The price to book value ratio is 4 times. If you look at all these fundamentals, what I've spoken so far, nothing has given me a negative signal about the stock, and stock seems to be great. Plus you get 40% discount on that. That is only like adding cherry to the cake. So we obviously like this stock, but no analysis is complete until and unless we see the relative analysis also. So what I've done is, in relative analysis, one company I picked up from the pure competition point of view, and one company which that is persistent, which does the typical consultancy services, but they also are involved in ER&D services. So why did I not take companies like Infosys and TCS? I personally felt TCS and Infosys are more concentrating on consultancy services. it will not create that right kind of a comparison. So when you're doing relative analysis, you need to understand comparison has to be done in among stocks whose nature of business is same. Just because two companies have tech word in them does not mean that you can compare those stocks. The nature of operations, the risk of the two companies should be same. Only then comparison can be done. Guys, if I look at the PE ratio, P ratio is very high for Tata Elxsi. The average industry is 18 times. P ratio of LTTS is on a lower side. Persistent is even lower. As far as LTTS PE ratio is concerned, obviously it looks like stock is not trading at a premium price as of now. Tata Elxsi looks to be trading at a premium price, but as far as LTTS is concerned, it is decently priced. That's what we can say, because it is less than industry average. Price to book value ratio, we already discussed, is 4 times for LTTS. It's very high for Tata Elxsi. That's one negative for Tata Elxsi, and it's very low again for Persistent, which is 1.67 times, which means price to book value is just 1.67 times. You're just paying little extra over and above the net worth of the company, that is the book value of the company. Does that make Persistent a better stock than LTTS? No, we can't conclude that. I have my reservations for that. I'll explain you why you can't say that. Okay, I told you, no, what is cheap in the market is not always best for you. You need to understand that. At the same time, what is most expensive is not best for you. You need to have your own judgmental way of deciding which stock is better. If I look at the profit growth in last 4 years, look at the profit growth which LTTS has given when compared to the other two companies, and this is where you understand why stock of Persistent is trading so low, because it has been able to register a very moderate, very slow growth rate, which is just 26% in last 4 years. And obviously when the growth rate is so low, तो लोग उस शेयर के लिए प्रीमियम प्राइस क्यों पे करेंगे सर? सिंपल सा बात है, जब आपकी कंपनी ग्रोथ ही नहीं दे पा रही है तो मैं उस शेयर में पैसे क्यों लगाऊं? दैट्स अ सिंपल स्ट्रैटेजी गाइस. ओके, इसलिए शायद उसका प्राइस टू बुक वैल्यू रेशियो और पी रेशियो आर ऑन अ लोअर साइड. If you look at the EPS, because that is what the shareholder is interested in, EPS again is very high in case of LTTS, which is 77. Tata Elxsi is not even half of it, which is on a very low side. Again, a negative for, this is a negative for Tata Elxsi, and even for Persistent, it is on a lower side. Beta less than 1, I don't want to speak. Less than 1 means I would categorize all three companies as defensive stocks. They are not volatile, which is a plus for all three companies. This is a positive for all three companies. None of them looks volatile to us. So as an investor, you should be okay with all three companies. The most important parameters, as I told you always, return point of view, we need to see return on equity. Return on equity is calculated based on PAT of the company. कितना प्रॉफिट उन्होंने शेयर होल्डर्स के लिए जनरेट किया है. दैट इज क्लोज टू 30% फॉर LTTS, which is very good. 36% for Tata Elxsi. 36% is on the higher side, and maybe that's the reason they have a price to book value ratio of 8.55 times, and it's again very less as far as Persistent is concerned. Return on capital employed is another profit measure, but it is based on the EBIT, the earnings before interest and tax. That is again close to 35% for LTTS, close to 35% even for Tata Elxsi, but again very low for the Persistent stock, which means these two are two big reasons why you find that Persistent is available at a very discounted price as compared to the other two stocks. That is, like I told you, it's zero for all three companies, which is again a positive signal for the shareholders. No debt means no interest burden, no financial risk is there. And then if you look at dividend per share, on an average 21 rupees of dividend is paid by LTTS, 16.5 rupees has been paid by Tata Elxsi, and just 12 rupees has been paid by Persistent, which again makes LTTS a great stock. Even if you're looking at regular source of income, which is dividends, you find dividends are very high in case of LTTS as compared to the other two stocks. How much delivery is being taken in these stocks? I found that in case of LTTS, mainly it's the investors who are coming in. People don't do much of BTST or intraday kind of trades. 65% delivery is picked up. Tata Elxsi, surprisingly, delivery is very low, and Persistent, again, the delivery is good. Anything above 50% is considered good, which again makes a stock non-speculative. ज़्यादा volatility नहीं रहेगा stock में, उसमें ज़्यादा फाटकाबाजी नहीं हो रहा है. That is the simple understanding. So if you look at most of these factors, we see that LTTS seems to be very attractive, both fundamentally and going by the relative analysis, which means now if I conclude my discussion, and if I look at all 3 points, fundamentally it's a good stock. Relative analysis, it's a good stock. Business uniqueness, great, not many companies are competing it, and discount to its 52-week high is more than 40%, making this a very attractive stock. And definitely it gives a buy signal, and that is what even we feel. It's if I give you my remarks, at the current price of 1068, stock is looking very nice, guys. It's a very safe investment. It can easily ride up to 1175. 1175, I feel there is one resistance for the stock. It does not cross 1175 mark, and if it crosses 1175 and it can sustain up till 1185, then I think it also has the potential to go up to 1250. That's what I feel. But there's a strong support now at 1050 odd levels. If it goes below that, we still feel percentage of downside risk is very less, very limited. So at its current market price, if you ask me, stock is really good with a short-term target of 1175. What would I recommend? I would recommend go for a staggered buy. If you're planning to buy total of 100 shares of the company, I would suggest maybe first buy 50 shares and then add up after that. Since results have been declared on Saturday, so we did not get an opportunity to see the reaction in the prices, which probably tomorrow will come in. So tomorrow, overall results I feel are okay, but post results, we really don't know how the response of the market will be. In any case, if the stock goes up and it opens at a gap up, even if it opens up close to 1100 mark, I still feel the stock is good buy at 1100 as well. And if it goes gap down, then 100% we can buy the stock. But I would suggest that you buy the stock in two parts. If you're a short-term investor, look for a target of 1175. At 1175, comfortably book your profits and exit the stock. If you can hold on to the stock for a longer period, like 1 year, 2 years, it can even touch 1400 mark. I hope, guys, you like the video. If you want me to cover some other stocks, you can just drop down your suggestions in the comment section. Stay bullish, stay safe, guys. Thank you. Bye bye.